Hey everyone, Nick Shaheen here looking at Palantir. PLTR is a ticker. I think this is my third or fourth video on it in a short period of time because I've done them. I think in two of them I guaranteed a move and they both came out boom with, the one being 20% yesterday. Today is the 8th and overnight it had another headline, some sort of got a new contract with somebody, FDA or somebody, government. Hey, I can tell you one thing: the government loves to overspend, so it's a cherry patch for them. Why not? Just the risk is that they have this big client that could walk away at any point in time. Don't know anything about that, so this is on you. So let's start charts. And my entire trading on this one has been just from the charts, and my comments are based on charts, and they've been so far good. I can't look at it from a daily perspective because it's still too new. I won't get very smart opinions on it, or at least not as clear as a path. So this is it on a 1 hour chart. So every candle is just 60 minutes, and basically it's history. And let me show you the lines I had on it from before. I know that this white box was where I thought the action was going to be, and so far it's played out very well. Circles mattered, and there was something going on here. I did a video, I said guaranteed action, and the next day it did this. I did a video here and I said guaranteed action inside the circle. The next day, even if not the same day, maybe the next day, it did that here. And then overnight today, the 8th, it had another headline where it just opened and had the spoke high. I wish it didn't have the spoke high, and I'll tell you why. First of all, it priced out the entire upside potential that I had drawn from before. But I think it also can serve as a preview of what can come next. So clearly, this is stock that has run too far too fast. That alone is not a reason to short it. If you're shorting it because odds are it's going to fall, you're gambling. Because what do you know that? I mean, I don't know anything that could say it's going to go down just because it's gone too far too fast. The whole market has gone too far too fast. Look at the small caps. So it's not a reason to go. So visually, I can slice this line slices the action basically in half for the last few weeks. So what now? In order to get an answer, I think I need to get more granular. So I'm going to take away the lines. I'm going to get down to maybe I'll start with the 15-minute price action. All right, so now I have information that's actionable overnight or tomorrow. I can tell you one thing, that where it's at, it should find support between 27.28 and 27.30. It should have buyers on a short-term basis. And if that fails, there's another set of buyers down around 25. They are buying the dips, and they are buying the dips in everything, so let alone this one. So what would be an action plan? Like tomorrow, if it comes up above that, I would chase the breakout. So either if I don't have it and I'm waiting for a trade, I would buy the dip or buy the rip. So buy the dip for a swing higher or buy the rip on the actual breakout. So there is a shorter term line which would be around 29.50, but it all depends on how quick of a trader you are. So if I'm a really fast trader, then I may want to even go down to a 5-minute chart, and then this line would be more visible, the 29.50. This would be a mini breakout that could lead us to the battle at 30.5 and 31.5. So it depends on how fast of a trader you are. On the 5-minute level, I can still see the same line I mentioned earlier, the 28 to 27.3 or 0.4, something like that. But 28 is a place where I expect the machines to come in and buy, and slightly below that. So there are a lot of pivot zones short term that could give us an action plan slightly longer term. This is a 2-hour chart. But there's no doubt about it that you have to establish the fact that the buyers are in charge and they have conviction. This stock has a lot of fans. Yep, give yourselves a hand. I recently found it just because of the people in my chat room, and the group was saying, hey, what about Palantir? So I started looking at it, and then I found out that there's a huge community that absolutely loves it and a few haters out there. So fundamentally, there's nothing wrong with it unless somebody's lying. I looked at the video they did for that spoke about the company. It's like a whole bunch of Mark Benioffs in there with regards to their enthusiasm to their company. I like it when I see great representation of the company by the people behind it, and then also good representation on Wall Street who know these people. How can I, who knows neither parties, judge them to be fake? So I have to assume, of course, assume that they are legit. The business is there, the income is there. I looked at the P&L, so it's not mega money. It's 200 million, 300 million a quarter. So it's there. It's not fictitious. And they can't cook the books. This is the United States. So I will take them on their word. And this is a stock I probably would hold for a super long time. And if I trade options like I do, I would sell put spreads on the dip, which I did. I would buy call spreads anticipating rips, which I did. I even bought a naked call that I turned into a call calendar, actually a call diagonal. One of the legs expires this week, leaving me long a naked call out to weeks on out into late December. I can't remember if it's December or December 31st. Anyway, the point is I want to be long on dips. That's no doubt about it. So what happened is the credit put spreads I sold went down to pennies. I bought them back. So I collected whatever I collected in premium. And then the rip happened, and then the premium I collected turned into nothing. So whoever bought them from me lost. That's the idea. That's a bullish position. You've heard it called a credit put spread. That's how I like to word it, because it's a credit and it's a put spread. It's easy to conceptualize for people who don't know it. Versus a bull put spread, it's the same thing. Because it's bullish. It doesn't need a rally to win. It just needs the stock not to collapse, the ticker not to collapse. And then I win. So it's easier to find where a stock is not going and sell risk there for somebody who wants the lottery to short and lose money, and I collect their money. That's the idea. The other one is buying a call or a call spread. Buying naked calls, the VIX is high, a very fast-moving stock. It's a daunting task. Buying a call spread spreads the risk, because now I'm buying something and then selling something. So I buy a call and I sell one higher, thereby reducing my entry cost. So I limit my maximum potential profit, but on bad days or on a few red ticks, I don't need a diaper because I'm not like losing my mind over, oh my God, what's going on? Because a few red ticks in a fast-moving stock like this could turn really negative really quickly and stop me out. Versus buying a call spread. So what's wrong with doubling my money or tripling my money or quadrupling my money? How do I do that? I buy a call spread that's cost me $2 and it's $10 wide. So the maximum profit is 10 minus the 2 I paid, so $8. What's wrong with making $8 with an investment of 2? Versus if I bought a call and it cost me $10 one call, then every tick lower is costing me hundreds of dollars, and it could be seconds. So where's your conviction, right? So a matter of preference. There are many ways to do this. That's the beauty of the options markets. I can, in this case, I started with a naked call and I got a rally, and then I sold calls against it. So to get into a nicely credit situation where I got paid to be long something. So that's the ideal way of doing it. I got lucky maybe, but I do know the charts and I use my own charts. So there, long-winded way of saying I would buy the dip. The bulls are in charge for sure. You don't need me to tell you that. But I did share the levels that matter. If you want them, again, at 28 to choose one, it's actually a little bit lower. 28 would be where I think buyers will come in. And if they fail there, there's another set of buyers at 27.3. Let's call it into 26.7. So every layer has buyers versus who the heck is going to sell this thing, right? And I would chase the rips where above a couple of levels. One is at 29.50. It's actually 29.80 if you want to be real accurate about it. And of course, this last failure on this headline right there could trigger it higher. Was this the all-time? No. Okay, so perfect. Yeah. So this is not an all-time high, but these are, quote, far enough, even though they're not, but they're far enough that the oomph from this, they might just ignore them and go boo right up there. Technical term, boov. Anyway, good luck, guys and gals.